Seeds of Wisdom RV and Economic Updates Saturday morning, the 2nd of November 24. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Seeds of Wisdom RV and Economic Updates Saturday morning, the 2nd of November 24. Good morning. Dinar recaps, Paxos issues, global dollar, stablecoin USDG out of Singapore. Partners DBS. Last July, Paxos Global confirmed it received the regulatory go-ahead from the Monetary Authority of Singapore, MAS, to issue a stablecoin, with DBS Bank as custody partner. Today it confirmed the launch of the USDG stablecoin, which it refers to as the global dollar. Given Paxos has a background of partnering with institutions such as PayPal and Stripe, it says the Ethereum stablecoin is designed to support the needs of regulated institutions that maintain higher standards of operation. Enterprise interest in stablecoins has never been higher than it is today, but the market lacks a solution that combines regulatory compliance with real economic incentives for enterprises, said Ronak Daya, head of product at Paxos. USDG offers a trusted solution with a top-tier banking partner in DBS that will be the catalyst to drive stablecoin innovation and enterprise adoption at a global scale. Singapore's largest bank, DBS, will provide custody for the securities, and dollar cash deposits will also be managed via DBS. Other stablecoins from Paxos. Paxos Trust in New York is the issuer of the PayPal stablecoin and also supports Stripe in its stablecoin acceptance. The company has its own US-based stablecoin USDP. And its UAE-based affiliate, Paxos International, issued the yield-bearing stablecoin Lift Dollar USDL. Paxos Trust was previously the issuer of the Binance USD stablecoin. The company has always been amongst the most conservative in managing stablecoin reserves to ensure they maintain their one-to-one peg. Hence, it will hold US dollar deposits, short-dated treasuries and other cash equivalents. The white paper states other reserves include reverse repurchase, repo agreements and institutional government money market funds. Reverse repo agreements involve temporarily lending cash, usually to banks, in exchange for collateral, in this case US government securities. Stateside, Paxos structured as a New York regulated trust to provide maximum protection to holders in the event of a bankruptcy. Likewise, Paxos Digital Singapore holds the assets in trust on behalf of stablecoin holders via segregated safeguarding accounts. Anyone that has opened an account with Paxos, i.e. has been through KYC, can redeem the stablecoin directly. It will usually take around a day but up to a maximum of 5 days in compliance with Singapore regulations. The minimum redemption amount is equivalent to the cost of the wire fee. Crypto Voters Guide to Congressional Legislation for the 2024 election. The 2024 United States elections will be held on November 5, as digital asset policy becomes a growing concern among pro-crypto voters. As the 2024 U.S. elections draw closer, digital assets have become a political issue for the first time. As industry executives and advocates apply pressure on candidates to pass pro-industry policies and embrace the future of money. Clear and comprehensive digital asset policy in the United States remains elusive, as regulators like the Securities and Exchange Commission, SEC, regulate through enforcement action, rather than rulemaking. This lack of a coherent framework is a growing concern for elected lawmakers, industry service providers, and single-issue crypto voters. While understanding a particular candidate's stance on crypto policy is key, voters must also understand the underlying legislation currently being considered in the House and the Senate. Listed below are the key pieces of legislation currently up for consideration. Financial Innovation and Technology for the 21st Century Act. The Financial Innovation and Technology for the 21st Century Act, FIT 21, introduced by Pennsylvania Congressman Glenn Thompson in 2023, aims to establish a comprehensive digital asset regulatory framework by bringing sufficiently decentralized assets under the purview of the Commodity Futures Trading Commission, CFTC. The bill features these defining criteria for sufficient decentralization. If, among other requirements, no person has unilateral authority to control the blockchain or its usage. And no issuer or affiliated person has control of 20% or more of the digital asset or the voting power of the digital asset. However, the bill also gives the SEC authority to regulate digital assets deemed as securities. In May 2024, the bill passed in the House and must pass in the Senate before it is handed to the President for consideration. CBDC Anti-Surveillance State Act. Minnesota Representative Tom Emmer first introduced the CBDC Anti-Surveillance State Act in 2023. The bill's goal is to prohibit the Federal Reserve Bank from ever creating a consumer-facing central bank digital currency, CBDC, or otherwise maintaining accounts on behalf of individuals. Moreover, the bill seeks to restrict the Federal Reserve from using a central bank digital currency to implement monetary policy or from issuing a central bank digital currency entirely. CBDCs face widespread criticism from the crypto community, liberty-minded individuals, privacy advocates, and commercial banks. In May 2024, the bill passed in the U.S. House and awaits a vote in the Senate. Clarity for Payment Stablecoins Act of 2024. The Clarity for Payment Stablecoins Act is a reintroduction of a 2023 bill of the same name, from Representative Patrick McHenry, and seeks to establish a comprehensive regulatory framework for U.S. dollar stablecoins. A key difference between the newer draft and the earlier bill is a provision allowing stablecoin issuers with a market capitalization under $10 billion to be regulated at the state level, rather than the federal level. The previous version of the bill advanced to the House floor but has not yet passed in either chamber. Senators Lummis and Gillibrand also proposed a similar bill to the Senate in April 2024, to establish a stablecoin regulatory framework. Digital Asset Anti-Money Laundering Act. First introduced by Massachusetts Senator Elizabeth Warren in July 2023. The Digital Asset Anti-Money Laundering Act proposes that digital asset providers should be subject to the same reporting requirements as traditional financial institutions under the Bank Secrecy Act. Warren is one of the crypto industry's most vocal critics, and the 2023 bill has faced significant backlash as one of the most anti-crypto pieces of legislation currently up for consideration. The bill has not yet passed in either chamber of Congress and even lost support from its co-sponsor, Republican Senator Roger Marshall, in July 2024. Listen to the full version on the official DinarReport.com website and become our supporter on Patreon. Source: Dinar Recaps. Financial Technology Protection Act of 2023. The Financial Technology Protection Act of 2023, proposed by Iowa Rep. Listen to the full version on the official DinarReport.com website and become our supporter on Patreon. Zachary Nunn aims to create the Financial Technology Working Group to combat illicit finance in terrorism and organized crime and emerging financial technologies. Earlier in 2024, the bill passed in the United States House of Representatives and has been submitted to the Senate for deliberation. Equal Opportunity for All Investors Act. Introduced by Nebraska Congressman Mike Flood in April 2023. The Equal Opportunity for All Investors Act would expand the definition of an accredited investor, lowering the barrier to entry for participation in private securities sales and offerings. More specifically, the bill would allow individuals to qualify as accredited investors by passing a knowledge test administered by the SEC. In 2020, the SEC amended its long-standing criteria for an accredited investor to emphasize financial knowledge rather than net worth, income, or wealth. The Equal Opportunity for All Investors Act was passed in the U.S. House of Representatives but has not yet passed in the Senate. The Blockchain Regulatory Certainty Act. Representative Tom Emmer, one of crypto's most vocal proponents, submitted the Blockchain Regulatory Certainty Act to the U.S. House of Representatives in March 2023. The bill's central goal is to exempt blockchain developers and service providers from traditional financial reporting requirements, as long as they do not handle customer funds. The bipartisan bill was approved by the House Financial Services Committee in July 2023, and allowed to advance to the U.S. House of Representatives but has yet to pass in either chamber of Congress. Keep Your Coins Act. Ohio Congressman Warren Davidson introduced the Keep Your Coins Act in July 2023 as a consumer facing protection meant to restrict regulatory agencies from preventing U.S. citizens from using self-custodial wallets to transact. At this time, it is unclear whether the bill will be passed into law or garner widespread support. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Source: Dinar Recaps.